Welcome back, investors, to Ticker Time News. I'm Adam. Thank you for joining me for the After Hours show. I'm glad you could be here. And just know that this show is all for you. If you have a question, feel free to leave the ticker symbol in your question in the comments. We'll go over it live during the show. Well, today it looks like investors are just completely frustrated with the market and the economy. So we're going to talk about that, and we're going to do a deep dive on BLNK Charging's Q4 earnings report. I thought it looked pretty decent, right? Revenue looked pretty good, but really, if you're betting on EV charging, you're betting on the future, not really what's happening today. And of course, in this current market environment, if you're not making that, if you're not making that money, that revenue, that profit today, then of course the stock's being hammered and hurt all across the market for those very reasons. So we'll get into that and the surprising strong results, I thought, from the earnings report. So we'll talk about BLNK Charging. Before we do, remember, this show is for you. If you have a question, ticker symbol, question in the comments. We'll go over it live on the show. So also, remember, beat this crazy market with us. Click the first link in the description or in the live chat, and we'll do this together. All right, stock indices, they failed to hold early gains this morning and closed lower, with the Dow erasing a 300-point increase this morning to close 230 points down. The S&P 500 lost 1.3%, NASDAQ fell 2.1%, and the Russell 2000 down 1.6%. Now, after banning Russian energy, I should say, imports this week, President Biden also called to downgrade Russia to, quote, most favored nation status. I need to dig into that. Not exactly what 100% sure what that means, but it just downgrades, I think, trading. They also enabled new tariffs to be implemented on Moscow and further lifting projections of course, the higher consumer prices all played a role in today's market. Now, on the data front, the University of Michigan consumer sentiment came in below expectations at 59.7. This was the lowest reading since 2011 and underpinned by a very sharp rise in inflation expectations amid higher commodity prices, which aren't even in the reports yet, right? So the key takeaway from this specific report is that rising inflation is eating away at consumer sentiment. As consumers recognize that their purchasing power has been reduced because their income's just not keeping up with inflation. That's just a fact. This is this could be translated into reduced discretionary spending activity. So instead of going out to dinner once a week, maybe people stop going out to dinner altogether. That could be one way. But people are going to have to find ways to save money and not spend money. So that is going to, of course, hurt the economy, right? It's going to cause this economy to contract instead of expand. Notably, though, it was indicated in the report that personal finances were expected to worsen in the year ahead, led by a large proportion of the survey being negative since the mid 1940s. So it just doesn't look good. The future just doesn't look great right now, economically wise, right? The Dow closed in the red for the fifth consecutive week, with war jitters pressured the S&P 500 and NASDAQ to fall for the second consecutive week. All of the 11 S&P 500 sectors, they closed negative today, down, leaving the benchmark index, the prestigious S&P 500, at session lows. I mean, if we look, this is the S&P 500 here on the chart. This is a daily view. If we go to the 5-minute view, and we've been watching this more closely, look at the sell-off today. As we got to the end of close today, the sell-off began. And you can see this morning We actually gapped up this morning and things were green, right? Then we get to about 10 o'clock and we have a sharp sell off. And then things are kind of flat and going back up towards 11 o'clock. And then we had a slow decline all the way to about 12:30. A little slight rally. Oh, could we end the day in the green? And nope. It just fell off into the close, falling harder and harder as it went. Giant red volume candle on today's close. And if we line this volume candle up to previous closes, let's just look at the past 5 closes here. And if we put our line right on top of today's close, it really wasn't as bad as if we go 2 closes ago, right? So this would be the close on March 9th. That volume was actually heavier, and that's when we had the big gap down right in the middle of your screen. So volume was up there, but it wasn't the highest. We've got this March 9th as the highest over the past 5 sessions. But still, it was a close into the red. We closed outside of this box, getting really close to 4,200 even, and maybe breaking down into 4,100. So what I see here is I see frustration. I see worry, concern. What's the weekend going to bring, right? That's what I see in a close like this, where it's just a rapid sell off. The closer we get to the end, the harder it's falling. People don't want to have their trades open during the weekend because who knows what can happen over the weekend, right? So, of course, that's what I see happening here on the 5-minute chart, and you can see it too. It was just a big hard sell off into the close, kind of stopping right there at 4,200, right? And not going below that level. Because the last time we were below that level into the 4,100s, we've got to go back here to just above my head here on March the 8th, right? That was the a big decline here. We broke into 4,100. We ended up closing, right? This was March the 9th. We closed. It wasn't the weekend yet. That would have been today, the 11th. But the 4th would have been last Friday. So if we just real quickly just go back and look at the fourth, we were up here, barely breaking into the 42s, right? Barely breaking into the 4,200s. But this right here, March the 8th, this would have been on Tuesday, this past Tuesday. That's where we were into 4,100. We closed 4,100. But something that interesting that happened is the next day when we opened, it was a humongous gap up, right? A big gap up. So what can we see for Monday? Well, with this big close today going really deep down to 4,200, there's a big possibility that we could have a big gap up come Monday morning. But it all depends on the news, right? What are the headlines? Because if anything, this market right now is being driven by headlines and headlines only. There's no fundamentals whatsoever in these market movements. You can look at different earnings from different companies and you can see that exact same thing. So that's one of the big things that's happening right now. The market's being driven by headlines. So holding above 4,200 right now. And if we look at the RSI here on the 5-minute chart, it is oversold in the short term here on the 5-minute. If we go back to the daily, and let's look at this on the daily chart. pull it up there so we can see it a little bit better. All right, there we go. If we look at the RSI on a daily chart, we're at a 39. So we're not quite oversold yet. It could go lower. So just keep that in mind. Monday, it all depends on the headlines, right? Also, on Monday, on the 16th, which is a Wednesday next week, that's where we have this purple vertical line right here. This is kind of like our line in the sand for the market. What's the Fed going to do? Because remember, the Fed comes out, they have their FOMC meeting next week. On Wednesday of next week, the 16th, Jerome Powell will come out in the afternoon. There'll be a press release. And then 30 minutes after that, Jerome Powell will come out and talk. And this is where we expect the 25 basis point hike in interest rates and for that to begin in March. What are the markets going to do after that? Now, what I see is that the markets will have some clarity, some understanding, maybe even a roadmap, right? How many rate hikes is the Fed planning? How much will each rate hike be? When will those rate hike occurs? If we get a blueprint or some sort of a plan, that could provide some stability for the market to rally. So that's why that day is so very important, because it is going to be partially responsible and play a big part in that responsibility for which way the market's going to go. Like I said back here, I would suspect that the market would move sideways all the way until we get to this day, March 16th. And then the market is either going to break this resistance and move upwards because they have a road plan. They have some certainty, at least on what the Fed's doing, maybe not what Russia's doing, but what the Fed's doing. And that could send the markets up past this resistance and into rally mode, at least temporarily. Or if the Fed comes out to be more hawkish, then this resistance line will hold and the market will go down. So it's a very big day for Wednesday, March 16th, especially in the afternoon. And I still believe up till then, we're just going to move sideways like we've been doing. Even though we've had these big red days in the S&P, today we were down 1.3%, right? On the 7th, let's see, the 7th was a big 2.95% day down. On the 8th, it was a 0.72% down. And then we had a little rally on the 9th, up 2.57%. And then we basically moved sideways yesterday, up 0.4%. And then today, down to 1.3%. So we're moving sideways until we get to that March 16th line. Okay, all 11 of the S&P 500 sectors did close in negative territory today. In those, the information technology sector was down 1.8%. Consumer discretionary down 1.8%. Communication was down 1.9%. The utility sector decreased just 0.4%, and that was the best performing sector. Now, the positive start this morning that we saw occurred after it was reported that Putin described a positive shift in talks with Ukraine. But the problem for the market is that nobody really believes what Putin says anymore, right? Fool me once, shame on me. Fool me twice, shame on you. How does that saying go? So the market doesn't believe him. If Putin comes out and says, the war's over, we're done, we achieved our objective, the troops will still be there fighting. So, what does that mean? What does that mean? So nobody believes him. So when something positive comes out, yeah, it might move the market for a minute or two, but then, it's just his words don't carry much meaning right now. And that's unfortunate. It really is. because when you put a cat in the corner and they're scared and they're freaking out, they will lash out with those claws. So got to be careful. Okay, so that was one thing about this morning. Um, but I don't think Putin's going to stop until Ukraine either surrenders 100% or something terrible happens. I don't even want to think about that. All right, there were other issues in the market today, though, including higher oil prices. Oil was back up 2.6% today to $109 a barrel, so still up there, following a suspension. And this is why oil prices went up. There was a suspension in the supposed nuclear deal talks between the U.S. and Iran that Russia is brokering. So let's see how that goes, right? Also, there was the yield curve was flattening. There was a decline in consumer sentiment, like I mentioned already. Excuse me. And of course, disappointing guidance from like DocuSign. That was down like 20%. Rivian also had poor numbers and they were down over 7% today. DocuSign and Rivian specifically, they reminded investors that there is still room for further downside in the growth stocks if they do not meet expectations, and they'll fall hard and they'll fall fast. So, man, it's just another reason why investors are getting out and dumping growth stocks. And that could have something to play with why Blink Charging was down, even though there were some positive things in their report. Uh, Oracle, on the other hand, was a standout because if you do have good, solid earnings and upbeat guidance, then you can, come out ahead in this market. Now, the mega caps were playing a big role in today's market as well, and they dragged the market down. If you look at the Vanguard Mega Cap Growth ETF, and the ticker symbol is MGK, that fell 2% versus the 1.1% decline in the Invesco S&P 500 Equal Weighted ETF, ticker symbol RSP. So again, equal weighted, not so bad when you have everything spread out. It's a good reason to be diversified at this particular moment in time, or use those ETNs that are inverted. That's another way to win at this market. The treasury market wasn't as excited as the stock market initially was following Putin's headline. It was relatively quiet, right? Price action signal concerns that the inflationary environment could lead the Fed to a more aggressive rate hike path, maybe more than the 25% basis points. And what is definitely happening, a slowdown in growth. That is happening right now. You think about all of these companies that are pulling out of Russia, not doing business in that country. Yeah, it may be a small portion of sales for majority of these companies, but that is still a portion of these companies, even if it's 1 or 2%. That's 1 or 2% that they're not going to have on their next earnings report. What do you think that's going to do for earnings? Nothing good, right? So there is a slowing down in the market, and not just because of pulling out of Russia either. The U.S. economy is slowing right now. Totally believe it. The 2-year yield increased by 3 basis points to end up at 1.75%, while the 10-year actually declined 1 basis point to end at 2% even. All right, here's where we stand year to date. The Dow Jones is down 9.3% year to date. The S&P 500 is down 11.8% year to date. Russell 2000 small caps did really good yesterday, day before, so they're up above the NASDAQ. They're down 11.8%. And then the NASDAQ has been down worse year to date, but it is down 17.9% year to date. Let's look at gold right quick. GOLD on TradingView, and there is a link in the description for a free account to TradingView. Gold has pulled back, right? It popped above $2,000 an ounce, which is a really big psychological number. I'm surprised I do not have a line here on that, but I'm going to do that right now because that's an important line. Because you can see here on March the 7th, it ran right up to it, but stopped just shy of 2,000. And then March 8th, broke that, ran up into to the 2000, got as high as 2070, and then here on the 9th fell back below 2000, and now it's just skirting right underneath the 2000 mark. We're at 1988 right at this moment. uh, Today we were down 0.42% for gold. But there was a bigger dip in gold, so it didn't finish at session lows today because it did get as low as 1958, and we're at 1988 right now. So about 20 points there from the very bottom of the lows of today's session. All right, so there's gold. It's up 8.69% year to date. Um, it is a bit stretched at the moment, being up there around 2,000 an ounce. And remember, it did run up here pretty quickly. So I think it's pretty impressive that at least it's able to hold here right around that $2,000 mark and not fall any further. If we go out and look at more of a bigger picture here, you can see that the wicks of the candles are coming down to this trend line, ascending trend line right here. Maybe that will act as a new support area instead of being a resistance area like it's been, going back all the way to June of 2021 when it fell below that trend line. So maybe that could be support moving forward. And then we'd get into a bit of a wedge pattern right here with $2,000 as resistance, and maybe that ascending trend line being support, and that could potentially provide a nice pop and boost there above 2,000. Possible. No guarantees, of course. All right, Bitcoin, BTC, USD on TradingView. There we go. And it is loading. And it's down 1.4%. 1.4%. It is down today. And if you look here, the Bollinger Bands, it has really been popping up and down, bottom and top of that. And that's one deviation away from the center mark there. So down 1.4% today. I need to get it the other chart up here. I didn't click on Coinbase. So we have our other lines. So we can see exactly. I know it's more cluttered this way, but this is where all my research is at for Bitcoin here. So we got to adjust this just a little, got to squeeze it up a little bit here so we can have a better view. So Bitcoin right now, it's holding at this area right here. Right around the $39,000 mark. It's at 38,892 right now, down 1.37%, down 15.8% year to date. And if we go look at a 5-minute view on what today looks like, look at that. I mean, it's flat, like nothing there. All right, so got to open this up a bit. Okay, so remember this is the 5-minute view here. Shrink it just a little bit. I want to get almost there. Almost there. Almost there. I want to get the full 24-hour view. All right, there we go. All right. So this is the full 24-hour view here. So and this is the 5-minute chart. So we're looking at the past 24 hours here for Bitcoin. Now, right here, earlier this morning, starting at 6:20 Eastern time, 6:20 a.m. Eastern time, there was a big spike. There was this big rally here. Let me just measure from the bottom to the top of this thing. It was a 3.34% move, so that was pretty significant. But once it did that, then it just kind of slowly bled out. But the important thing here is it's been holding flat in the afternoon while the rest of the stock market was selling off and getting sharper and sharper into the close. And if we look here, right, we have this one big, call it a 5, 10, maybe a 20-minute window right here where Bitcoin did dip down 38,300, and then it popped right back up to near 3,900, getting really close to that. And it seems to be following in this path right now, slowly rising, ran too fast, came back down. But it seems to be wanting to push up to that 39,000 area, or at least get right underneath it. So there's Bitcoin. We'll go back to the day chart and then pull up Ethereum, and then we'll do our deep dive on Blink charging. All right, ETHUSD for Ethereum, and Coinbase is the top choice. Let that load. Down 1.5, 1.48, 1.5, 1.6%. It's moving pretty quickly right this moment. 25.65 at the moment. This is the daily chart right here. So each candle equals 1 day. It's also holding in a bit of a range right here with a bottom somewhere around 24.80 and a top somewhere right around this, we'll call it about 27.80. So that $100 spread, or no, $200 spread, sorry. So about a $200 to $300 spread here between the bottom and top, and it's starting to move sideways. And I think we'll see that. Although crypto can act crazy on the weekends, you can get runs and falls all on weekends. If we go look at the 5-minute view here for Ethereum and get the whole day on here, I'll go back just a little bit further here. Okay, there we go. So this is the whole day. It's same rally right here that Bitcoin had. This one started a little bit later. This one was about 6:20 when it started. And then ran up, and then the exact same thing happens. If we went to overlay Bitcoin here, it would look nearly identical in its movement. Here we go. All right. This is going to show Bitcoin and Ethereum. And look at that, almost identical move. The orange line is Bitcoin. And this isn't the same price, obviously, but this is the same percentage move. All right. So it'll show you. So here, earlier in the morning, right after midnight, both of them started going up, right? Well, Ethereum ended up going percentage wise, running up a little bit higher than Bitcoin did by 2:50 a.m. Eastern time. And then percentage-wise, Bitcoin stayed a little bit lower, but both of them kicked off a rally. Bitcoin about 10 minutes before Ethereum did, and percentage-wise, Bitcoin rallied higher at first. Then as Bitcoin cooled off, Ethereum ran a little bit more higher percentage-wise. And then they both cooled off almost identical. And then both of them almost identical on time frame. Both dipped here in the afternoon and immediately recovered, right? So there you have it, running almost identical uh, here. So now let me remove that so we don't have it here on the screen. All right, let's go back to the daily view, and that's Ethereum. All right, so there's gold, there's Bitcoin, and Ethereum all laid out. What happened in the market? So now we'll talk about Blink charging. Now, the ticker symbol for Blink charging is BLNK. So BLNK, Blink charging. There we go. Now, it's not going to look pretty. It's not going to look pretty. I don't have any of my vertical lines here. Well, I've got last earnings. I usually put a vertical line on to mark earnings, so that way we can see what price action took place due to earnings. So last earnings, Blink charging actually gapped up and ran, and now it's been moving sideways for the most part. But today it was down 7.7% and down 0.4% in the after hours. So with that, I would say Blink charging is blinking red today, although the electric vehicle charging equipment company reported, I would say, a surprisingly strong Q4 earnings report. Blink reported a larger than expected loss, but I don't get the sense that this and this only explains why the stock is down so much today. I don't think investors currently view that loss as important, as Blink is not going to be profitable for years anyway. So I really don't think investors are worried about that point. The more meaningful metric was revenue, and it has been for several quarters now, which more than tripled year over year and rose 24% quarter over quarter to $7.95 million in Q4, which was better than any analyst had expected, including myself. And for all of 2021 now, revenues jumped, get this, 236% year over year to $20.94 million. So maybe investors are focusing on the quarter over quarter slowdown because it did slow in growth to 24% in Q4 from the 47% in Q3. That may be what investors are looking at and why it's down 7.76%. That could be it. However, if this is the case, it seems like nitpicking to me. Yeah, I'll call a spade a spade. Blink charging did concede that EVs currently represent a small percentage of new car sales in the US. However, that percentage is growing every year. And Blink sees state and federal governments looking to accelerate EV use as time moves forward. As a result of that, Blink continues to target high volume ventures to deploy its chargers, including stadiums, government locations, apartment buildings, and healthcare facilities, hospitals, and such. And that's a good use. You want to have your chargers where the masses are, and that's where the masses will be. Now, the recently passed $1.2 trillion infrastructure bill includes the $7.5 billion portion for EV charging build out in infrastructure. Now, President Biden has said that he wants half of all vehicles sold in the US by 2030 to be zero emission. And to support that, he's targeting a 500,000 EV charging stations in place, already built, already established that same year, 2030. So, charging stations act, think of them how when the gasoline engine emerged and you had the Model T, right? People needed gas stations. So, what started to pop up on every corner? I'll give you a second to guess. Gas stations. Now that we're in this transition period to cleaner energy, we are going to be looking for charging stations to become the new gas station. And that's what Blink Charging, that's what ChargePoint, that's what they're all setting up for. Even Tesla in their supercharger network. They need these gas stations on every street, every corner, every town, every city. They need these charging stations. Just like gas stations used to be needed and still are, right? We can't just turn it off all at once. We have to do this gradually. So you'll start to see gas stations if the gas station owner is smart and is a good business person and thinking ahead. They will start transitioning their gas station by adding EV chargers. I'm sure you've already seen it out there in the world today, where gas stations where you can go and put gasoline in your car, maybe over by where the vacuum thing is that never works or hardly works or sometimes works or has a hole in it and is all duct taped up. Maybe you'll find an EV charging station over there as well. That's a good possibility. So any smart gas station owner today will be planning ahead and will be adding EV chargers. And it's not just, like they call up Exxon, and say, hey, we need an EV charger here. Send me the part so I can put it up. No, it's Blink Charging. It's ChargePoint. It's even Tesla. They're going to be putting in these charging stations. So if gas station owners are smart, this is what they'll be doing. Transitioning, opening up space for EVs. Or just, building a whole new gas type station that's for EVs specifically. Because, EV stations, they'll have McDonald's, they'll have a Burger King, they'll have some sort of refreshment for humans because we'll need to be charged too, right? With something to eat and something to drink. And while the car is charging, you can go into a restaurant maybe, right? If I owned a restaurant, I would put right up front beside the handicap spots RV charger. An RV charger. Maybe a few of them. And maybe, paint those EV charging spaces with, a specific color, a lightning bolt going through it. This is me brainstorming and thinking out loud to give you entrepreneurs something to do. Um, and have EV chargers at the restaurant. Because if you have someone driving an electric vehicle and they're looking for a place to eat, well, maybe, just maybe, since inflation is going up and everything is becoming more expensive, maybe the way you can get the business is, at least for EV drivers, you have a place where they can park and they can charge while they're eating a meal. So it makes sense in the long run to start having these installed. And savvy business people will be the first to have EV chargers. They'll call Blink Charging, they'll call ChargePoint, and the other charging uh, station providers to have them installed. So I already see it happening. And it will go slow at first and then go fast, because that's how it always is. Think of the roller coaster. Always think of the roller coaster with business. It's slow getting up, clink, 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 clink. And then you get to the top and it's, oh, ever so slowly you start creeping over the edge and then whoosh, down you go. That's how the business will be on EV chargers. Okay, so back to Blink charging specifically. Sorry I went off the charts there and just started thinking out loud of all the business possibilities. Uh, if you're a teenager, a great business to get in, when I was a teenager, there was the whole mythology of, you know, owning vending machines. Get rich quick, do vending machines, right? That was out there. There were people that I knew people that did that. Wasn't too bad. I mean, if you hustled, you could make some money. Maybe EV chargers are going to be the new vending machines. You buy a piece of land, you lease a piece of land, you put chargers in. Maybe that's what young entrepreneurs can start doing. All right, back to Blink Charge. Enough of the brain. I would love to brainstorm about entrepreneurship. Love it. But back to Blink Charging and their earnings report. Now, just like gas stations served as hubs for pumps, they're going to be hubs for chargers as well in the future. So the 500,000 charging stations, that actually translates to about 2 to 3 million individual chargers. So that's quite a lot, but it's not as many as how many gas pumps are out there. Uh, Blink Charging believes that this legislation is a game changer, because that's 2 to 3 million charging stations that somebody's installing, and it might as well be Blink. That's what they think. Now, for the industry, this will significantly accelerate the deployment of the ever expanding EV charging network in the US. So that's a good thing. All right, bottom line on this. I'm surprised to see the stock pull back 7.76% following what I thought was a pretty strong earnings report. Granted, now quarter over quarter growth did slow a bit in Q4 relative to Q3, but that seems to be a minor concern, right? You see me on that? Blink does not provide guidance, but I expect strong top line growth in 2022 as EV sales increase and as infrastructure funds become more available, because that'll be going to Blink. Also, high gas prices have been surging. Nobody likes it. And that should help to fuel demand for EVs. Now, I'm not the type of person to say, "Oh, gas is too expensive, then why don't you go buy an EV?" No, I'm not that type of person. I understand this is going to be a slow transition, very slow, slow, then fast, right? Okay. So we can't rag on people if they don't have an EV. I don't have an EV, but being in the wheelchair, I don't really have many options for EVs. But that's beside the point. All right. So despite today's pullback, I do see Blink as a pure play on the build out of EV charging in the coming years. So that is a good thing. But I do understand that right now, investors are not looking for growth. They're just not. They're not looking for growth. And quite frankly, I am a bit surprised that Blink charging is actually holding up as well as it is. Yeah, it fell 7.76% today. And yes, it has fallen a lot. We can see that on the chart. But if we go back here just a little bit further before this big rally here, this small area here, it's just in the corner right here above my head. It's kind of hard to figure out where to put the finger. Right up here, okay? This area, this was $6, $7, $8 a share. Blink's not down there right now. So that's a positive. That's a positive. So I am surprised to see it still up here, $23.09 a share. I mean, it's above $20 a share. I am honestly surprised to see that in this climate, in this environment that we are in. So that's why I say it's been holding up pretty well. Because if you look, going back to this low right here, hit on January the 28th, I mean, it's been moving sideways. You really can't ask for better performance in our current environment where growth is just getting hammered and beat up really bad. And then you find Blink charging kind of just moving sideways. That's not bad. But Blink charging is a play on the future. And I understand that. And I understand the stock could fall more. So there's no delusions about grandeur here. All right. So there's my thoughts on Blink charging. But, let me know. What do you think? Do you agree or do you have a different view on Blink charging's earnings report and their future? Do you see the legislation for the 500,000 charging stations to be a game changer, as Blink Charging says? Or is that just something that's going to be so slow to roll out that maybe Blink won't even, get funds from that? Maybe it'll go to somebody else. Who knows? But let me know in the comments what you think about Blink Charging and their earnings report. Um, let's see. I really like your brainstorming. Well, thank you. I appreciate that. Sometimes I do go a little bit off topic and just think of wild things, but it's fun. It's always fun. I enjoy it. All right. I covered everything that I wanted to get into today. Did you have any questions? Let me know before we wrap this live stream up. I know it was a challenging day in the market and things just didn't go the right way, but it was a Friday and we kind of have this pattern of selling off on a Friday because investors, especially short term traders, they don't want to hold a position over the weekend when this market is being driven by headline after headline after headline. So I do understand why it happened today, But I also believe that investors are getting really frustrated. And one thing that I can say is don't forget about this coming week, because this coming week has that very important date of Wednesday, the 16th. Will we be able to break this resistance on the 16th, or are we heading lower? That's what the 16th is all about. Will the market be at ease because the Fed provided a roadmap for when the rate hikes will occur? At what rate will the hikes be? Will it be 20 basis points, 50? If we get a roadmap like that on Wednesday from the Fed, that could provide some stability for the market to move on. So there's a lot riding on March 16th. And then, of course, you got the wild card still hanging out there with what's happening with Russia and Ukraine. Hopefully, that can come to a peaceful resolution soon and not get any worse. I am no historian or student of war and conflict, so I don't know. I do not know. Um, but with the market, I do know that the Fed is going to play a big role in how the market reacts and moves after the 16th. All right. Well, let's see here. How can I use your list of value? Okay. So great point. Great question. Let me come over here and do this. Give me just a real quick moment here. Yep, I could do that. Is a good point. Um, that is a good point. I do have a an updated dividend coming out tonight as well. Uh, so okay, so for the value, and this isn't bad for non-members to hear. I think it's okay. Um, I'm just gonna pick one. Um, Members know that we have our top 10 stocks list, and we do it for top 10 value, top 10 growth, top 10 dividend, top 10 momentum. The value, growth, and dividend, they're updated at least once a month, but it's with the way the market's been going, we've been updating them like 3 or 4 times a month. And then the momentum one, that's one that we update on a weekly basis. Now, for the value one, and members know this already, we actually do value and we do bonus stocks for it. So it's not just 10, sometimes it's up to actually 15. I'm going to pick one that we've talked about publicly before, and that's ArcBest. Ticker symbol is ARCB. Bring their chart up here. Now, this is one that we have been talking about. Oh, maybe Man, it's been so long ago. I can't exactly remember when we first started talking about ArcBest, but it's been on the list, I believe, uh, every time since the beginning of the year. But there's a video for ArcBest out there um, right now. I forget the date that it was published, but you can always type in ticker time news ArcBest and you'll get it. Oh, I'm looking for the date that it was published. I'm not finding it. Okay, anyways, okay. So what you do, we give out these lists. ArcBest is a name on our value list. It's actually one of the bonus names, and it's been there for a long, long time, for months now. So for value, okay, we have a system nailed down where we're constantly looking for companies to add to one of those four categories: value, growth, dividend, or momentum. When it comes to value, we're not looking for people to get into a value trap, right? We're trying to help you avoid a value trap. So, with the value list, we're looking for companies that have a strong relative strength, um, a strong relative strength. I was just looking here to see if there was this date for when it was published. Anyways, I can't find the date for when this was published. Maybe December the 7th. Is that yeah, December the 7th. So we have a standalone video out all about ArcBest Corporation. It was published December the 7th. So that's one that you can definitely go watch. And I can actually grab the URL. I'll put it in the description there. It was done as a stock idea because at the end of the year, or for the month of December, we were doing videos. We were doing videos for stock ideas for 2022. All right. So there's um, the link there for ArcBest. Um, there we go. Did I hit it twice? I hope I didn't do it twice. Okay, there's that for that video. All right. So back to value and how you can use these lists. So if you're looking for a particular stock in one of those categories, right? You're looking for a value stock, uh, meaning that it's not overvaluated, the price is fair value. Um, but we also tack on that it needs to have a high relative strength. And high relative strength means that investors are investing in this company. There is a high level of money flow coming into the company, whether institutional investors or individuals. It has a large uh, influx of relative strength of money flow into the company. And you can see here on ArcBest, um, if we go back, this was one hump right here, August the 9th, all the way through until December 30th. There was a lot of money flowing into this. There was a rally in the stock during that time. The relative strength was really high on this one, all the way to that point. And December the 7th is when we put the video out there when we talked about ArcBest, which would have been just which would have been in between, well, closer to the December earnings. No, I guess it would have been right after earnings, December the 7th, or a month after. There we go. So about a month after earnings. So December the 7th is right here. Let's mark that. All right. So what we're looking for, that's about where we recommended ArcBest. Looking for a color that kind of stands out a little bit more, but I didn't want it to be red. Okay, so that's where we recommended the stock. And let me go back and show you here. Let's put a line on it. If you look here at the relative strength, which is down here, you can see that this was a high relative strength company. It was up there, and it didn't really fall off until December 30th. And then it hit a bottom right here, and this was actually a great time to buy. And this was towards the end of January. And since then, if we were to put a straight line here, the RSI has been rising since this point. And what the stock has been doing is the stock has been moving sideways. So the market may have been, going down, but at least it's been holding above its 200-day moving average. And that's what this line is right here. This is that 200-day moving average, and it's coming right in here, and it's acting as support for the stock. And that is good strength for the stock, and that's something you want to see. Right now, there are a lot of companies, especially if we want to, dive into the S&P 500, that are below their 200-day moving average. That's not strength. So that's one thing that's very important to me, is that it has strength, and ArcBest has got that strength. And if we want to look at the money flow, same thing. From right here, August 27th, money was flowing in. This is at the chart all the way at the bottom of the screen. Money was flowing in, and then it stayed high all the way until the middle or end of November, and then kind of went down, plateaued, and then went down to a buy at the end of January. And just like its relative strength, if I were to draw a straight line, it's also been increasing over time, which means this is a really good consolidation phase for ArcBest. It's when money is being put into, investors are increasing their quantity of shares. The price is holding steady right on that 200-day moving average. Not to say that it could never break through. It is possible. But with the RSI rising, you have your money flow rising. Um, that means that investors are building up the quantity of stocks that they hold in the company. Now, this was also done back here before the RSI really started to kick off. It moved sideways right here, and this would be from about the end of July, middle of July, to the end there of July, for about a month's time. It moved sideways and it was being consolidated. And at the same time it was moving sideways, the RSI was going up and the money flow was also in a buy point and it was rising as well. Now, that's the exact same conditions that we're seeing right now today. Back in July and August of 2021, the stock was moving sideways. Relative strength was gaining, it was increasing. Money flow was increasing. There was consolidation going on. Investors were building up the quantity of stocks. And that's the exact same thing that we're seeing here right now today. The stock is moving sideways. Relative strength is going up. Money flow is going up. And we're seeing the exact same thing. And if we want to compare one other thing, that would be volume here. And if we compare the volume, really there's not too much difference here. If we put this, let me get a straight line instead of that. If we put a straight line across here at the top of the volume and run a straight line across there to help us see volume a little bit better, you can see that right now, volume is consistently higher than it was back here during this consolidation phase back in July and August. July and August, it was very sporadic. We had volume going up and down, up and down. While today, volume is more moving sideways and staying constant. So those are all really good indicators that we have a value stock here. There's not going to be a value trap here. And investors right now are consolidating and they're building up the quantity of shares that they own. So, you buy one share a week or 5 shares or however many it is that you do. But this would be an example of when a consolidation is happening. So that way, either in the medium term, you can, when the rally breaks, right, you ride the wave up and then you sell when it's near the top, right? And you get out and you rinse and repeat. Well, right now, we're moving sideways. So when the rally continues, we're going to go up and then you can either cash out when you get to close to the top, or you feel good, or you can hold it for a longer term. This would be like the medium term time frame that we're getting ready, building up our share count. So when the rally occurs, we have more shares. That means the rally is going to have more of an impact on what we can achieve in holding the stock. So that's one reason why I like ARC best, or all these different things that are happening here on the company's stock chart. And that's not to say anything about the company's fundamentals, which I think are pretty good. And I did dive into a little bit in that video there on ArcBest. Now, I do send out with the top 10 list a kind of um, overview of what the how we come up with these stocks. And um, it's not really a secret per se. I've talked about these things before, but for the value stocks, um, there's, and I specifically say this quote, there are no growth, profitability, or market cap requirements for any of the stocks that we put into the value category. But the whole reason that we put those 10 and, of course, the bonus ones in there are, we think that these are the 10 highest quality stocks for that particular, in this case, value segment of the market. Okay. And we believe very strongly that the stock is going to be a winner long term. Now, of course, there is a difference in the type of stocks that will be in each category, because our objectives are different for putting stocks into one of those four categories. But they are definitely the highest quality for their category. Also, in the note that we send out to members, it kind of explaining a brief overview of what we do here. It's not just fundamental metrics that we look at, um, like PE, high dividend yield. Uh, there's a very specific way to how we pick these stocks. And we also put in there that in practice, right, the types of names that you'll typically see on the value list are turnaround stories, right? And what turnaround stories means is that maybe in the past there was something that wasn't quite right with the company, right? Maybe they had an issue with someone on the executive team, and it just dragged the stock down, um, didn't provide value. And if we go back here in history here, we don't have to go back very far to find a stretch in time when this stock was going nowhere. I mean, just look at this area right here, right? This was an area where the stock was actually in a downtrend for multiple quarter downtrend. This would be a 1, 2, 3, 4, 5, 6, 7 quarter downtrend right there. So it's not just, you go to some service and you type in uh, companies with the highest this or highest that. No, we do our research on these companies. And ArcBest, it had a big problem back here with the company itself, and the stock was going nowhere. But now the story has turned. The script's been flipped for this company, and it is performing so much better. And this is another reason why a stock will be added to the list, because something has changed at the company itself, making it a much more higher quality company. Because back here, 2019, the company wasn't doing all that great. And we would not have added this to our value stocks list, or any stock list for that matter, because of this poor performance and what was happening with the company. So, just some thoughts here on what goes into getting these stocks onto the list. It's not just running it through some screener and then saying, "Oh yeah, here's 10 stocks. Hope they work out." No, no. There's a lot of research that goes into it. So by presenting these names to you, if it's a value stock, then maybe that's a company that you want to build up your quantity of holdings in, right? If it's a growth stock, then maybe it's one that you want to swing trade, right? Maybe you want to get into it, and maybe in a couple months, once it's run its course and it peaks, then you sell and you get out of it. When it comes to the dividend stocks, those would be companies that you want to build up the quantity of stocks that you own so you can get that return. And when it comes to dividend stocks, we don't just look at the dividend yield, like right here on TradingView. We can see that ArcBest has a dividend of 0.37%. There's more that goes into it than just that dividend yield. If there's any buyback authorizations, that is also a form of a dividend being paid to you. So we also find companies that have buyback authorizations going on as well. Like Amazon just announced the $10 billion buyback authorization. Companies that have those and have a good yield and have a good story, well, then they make it to the dividend. And then the momentum list is it's the companies that have the biggest momentum right at this moment in time that you could day or swing trade. And that's what these stocks are. Um, Also, in the practice section here uh, for um, value stocks, we note that turnaround stories that market participants are betting will succeed. Cyclical companies near uh, in their cycle, and or companies that are about to benefit from more favorable commodity prices. That's another big one. And that's just a few scenarios in there. It could be a company like ArcBest here, who, because of certain aspects of it, if we go down here, and this is one reason why I love TradingView. You can get a free account to TradingView by clicking on that link in the description. But anything you want to know about a company, you can find it here on TradingView. Uh, you know, Look at all on your right hand of your screen here, all the text here. This is everything that ArcBest is doing. So at the heart, it's a logistics company. And what in the world does this world need right now more than logistics? I know it needs a lot of things. Nothing's perfect. Um, we need a lot of work. But logistics companies are in very high demand right now because of our messed up supply chain. And that's another reason why ArcBest is on the list, because of what it is that they do. Um, so I know I kind of jumped around here and there when talking about answering your question about how do you use the lists. You use the list by these are companies that we have done extensive research on, that we're suggesting to you. Do your due diligence, and if you feel that the company makes a good fit for your portfolio, uh, then you buy into it. And one thing on the buy side, let me go bring it in here a little bit tighter, uh, on a more recent time frame. But when you're looking to buy a stock, now I know that nobody has a crystal ball and we can't determine what's going to happen next precisely. We have probabilities. And what's the probability that this stock is going to do this within this time frame? So ARK it's been hugging its 200-day moving average. So if you're looking for an entry point, you can use a trading view here instead of stock alert. So right now, the 200-day moving average is sitting at $83.07, and there's been a lot of reactions on that it's bounced off of. So what I'm going to do on TradingView is at since 83.07 is the current 200-day moving average, I'm going to go to like $83 as close as I can get it here. 83.10. And you can set a stock alert, top line, add alert for, and it has the ticker symbol ARCB for ARKBest at $83.10. I click it and then it's set. And it's got a little orange line, dotted line here to remind me. So now that I have the stock alert set, I just basically sit back and wait. When the stock alert is triggered, that's when I would go in, open up TradingView, and I would look for a couple of key things. Number one, I want to see what type of day it is, right? Is the broader market selling off, moving sideways? Is it in a rally? That's step one. The broader market. Then we're going to look specifically at the stock. So first, where's the RSI? Is it oversold, overbought? Where is it? And if it's over 70, then it's overbought and I don't want to buy it, because that means that it's going to end up coming back down in the short term, right? I want to get in while the RSI is down like 50, 40, 30, because 30 and below means oversold. So I really want to get in when this thing is down near 30. But if we look at how it's been acting, its most recent low has been 30.2. That's its recent low. And that occurred back here on this buy alert, back here towards the end of January. So that's first thing I want to look at. And then I want to go look at the daily chart, 5-minute chart, not daily, because that was daily. And then I want to see what type of day is it having. Is it having big moves up and down? Is it, just moving sideways? Is it falling? What's it doing on that particular day that my stock alert was triggered, right? So if we go back here and look at today, well, today it was moving sideways. It triggered that, just about any point during the day would have been okay to buy. Now, if it was happening on a day like this, where it was just a straight decline, it was just falling straight down, that's not exactly a day when I would buy. I'd want to wait and see for it to hit that bottom and start rebounding and then moving sideways. That would be the best thing, to wait till it got to this point. Sure, it's going to cost you let's see, the bottom was about 79.25, and then the top was about what is this, 86. So I mean, you got a $7 swing in there, and that makes a big difference. But you don't want to buy when it's going to continue falling down, right? So I like to look for flat days where it's under my price target, where my stock alert was set for, and it's moving sideways or maybe slightly down, or even slightly up is okay. Another thing that I do is I like to have these Bollinger Bands. And the Bollinger Bands are these blue lines that go on top of and on the bottom of where the candles are, because that's showing me where the stock is moving together, the top and the bottom on that day. And I'd want to buy the stock when it's near the bottom band, not necessarily the top band, because that could save me. Well, let's look at today. The top band up here would have been, what is this? Let's just call it $87. Well, the bottom of the band would have been $83. So that's a nice difference right there, especially if I'm buying multiple stocks, right? So using those Bollinger Bands to help me know when to click the button to buy shares of a stock. So a lot of things that I just went over right there. I hope that helps to answer your question. But just a brief summary here. The names are on there because we think they are of the highest quality, the best of the best for each of their categories. And then you go in, do your due diligence. If you think it's a good fit for your portfolio, then you find a good entry price that you feel comfortable with. Set a stock alert for it so you don't miss out. And then you step in and you buy it when the timing is right, when it fits your needs, when it fits your timing. So I hope that helps. And we try to rank them in such a way that even though it is 10 plus bonus stocks, they're at least in an order to which we feel that's the order that they should be in. So number one really is 10 times better than number 10, if that makes sense. Hopefully I didn't lose you there with that very windy explanation of everything there. But yeah, that that was the long answer for your question for sure. Okay. All right. Well, then I'll go ahead and wrap the stream up here. I'm gonna do a couple deep dives and get videos out there. A I want to do a deep dive on Rivian. I also am thinking about doing this deep dive on Meta platforms and Google and the regulatory problems that they seem to have found themselves in at the moment, and get those stocks out. And I mean, get those videos out there for you guys. All right. Well, no more questions. I'll go ahead and wrap the stream up here. Uh, Hopefully everything was satisfactory with your question. I hope I answered it good enough for you. All right. Well, just cleaning up the stock chart here a little bit so it's not uh, so messy here. I think I just about got them all. Just giving you a couple extra seconds here. If you wanted to confirm that I answered your question, or if you had a different question. All right, that's all cleaned up. And I can take that stock alert off. I don't need that here anymore. All right. Well, it looks like that's it. I don't see any other questions coming in. So if you have a moment, go ahead and watch that ArcBest video. I know it's from a few months ago, but it does have some good information in it. Yes, some of the information is outdated because, of course, there's been other things happening in the world and other earnings that have come out since then. But I hope it helps. And it's Friday, so have a good weekend. And I have several videos coming out over the weekend, so make sure you got the make sure you're subscribed. Make sure you click that notification bell so you get notified when the videos come out. And if you don't happen to get that notification, then go into Google and just do a search, Ticker Time News, and make sure you're up to date on all of our videos that are out there. And if you could, smash that like button, share this video, and that helps. And then, of course, if you want to beat this crazy market with us, then click the first link in the description or the link that is in the live chat. And if you're watching the replay, uh, leave your ticker symbol and question in the comments, and we'll go over it live during Monday's live stream. All right. Thank you, ladies and gentlemen. Have a wonderful weekend, and I'll see you in the next video. Take care.